This is our Forex blog for April 2nd, 2012, and this is the second Forex blog video where I show our new pivot strength daily, weekly, and monthly trend strength underneath the real-time FX Trend Pro. We plan on releasing this later this week. And the beautiful thing about it is it works both in real time and historically. So when you bring it up on your charts, even if it's a tick chart or a range chart, it will let you see how the currency trends progressed. So in other words, the dollar was weak and then it had some strength here late Sunday, which changed its daily, weekly, and monthly trends from pretty extremely weak to somewhat weak, and even actually upward on the monthly trend and weekly trend here coming up to midnight. Now, being able to see what happens in the past allows you, if you see some strength and then all of a sudden weakness comes in, if it's just barely strong like this, it could obviously go back towards the previous trend, which was extremely down. So if you see some weakness come in and you can see the history here, if you brought it up in real time and you only saw some strength here, you don't know what the history is, you might be afraid to look for sells in it. But because it was so strong before, that it really, the daily trend's still slightly down. The weekly trend just shifted up, but it's just barely up, and the monthly trend has done the same. So it's not significantly that strong, and the previous trend was pretty extremely weak. So when you see some real-time weakness come in, you can certainly look to sell it versus some of the stronger pairs like the pound. The euro really is kind of mixed. The Swiss, for the most part, strong on all time frames. So, starting the day off, weak dollar, strong Swiss, strong pound, we can sell the dollar Swiss coming into today. Let's take a look. Here's the dollar Swiss chart. Now again, later in the day the trend changed, but starting the day off you're looking for sells in the dollar Swiss, and as we scroll into this we take a look. It's above the hourly, so it's more likely to go up. You might have shorted here with a small break even, 2 or 3 pip loss, shorted again here. It fell about 8 pips, you would have pretty much broke even or lost a few. It shorted again here, it fell 15 pips. You always want to draw your fibs off the last wave, and this was a pretty dead day. Usually you don't want to trade until at least 3 o'clock, so you probably could have avoided those earlier trades regardless. And it came down to the 1.618 and ran out of steam. You can also see that the real-time weakness on this particular pair really wasn't that weak. But nonetheless, you had about 15 pip profit there. That's pretty anemic, actually. The pound is very, very strong. So let's take a look at buying the pound dollar today, starting the day off. And you can see this one also started the day off underneath the hourly moving average. And previously, before these new tools, I would not necessarily be looking for buys down there. You definitely don't want to buy when you see it's really weak like this. But once the weakness kind of disappears and it's kind of going sideways, it breaks back from underneath to above the hourly right here. You have a beautiful 40 or 50 pip win right here, little pullback, and you can see it went up another 30 pips. Every time you get a nice wave like that, draw your fibs, and look, almost to the exact pip it went. Anytime it gets above the upper containment band, usually you can expect a reversal, and I'd like to showcase this exact same currency with a 6 pips per bar chart. Notice that with the trailing stops on here, you're in at 93, out at 30. That's a nice 37 pip win. This little pullback right here, you would have lost. You're back in again here at 25 and out at 46. So you have a 10 pip loss, 20 pip win, and maybe a 40 or 50 pip win. And when the currency gets above the upper containment bands, usually you can expect a bigger pullback. You want to draw your fibs on this first wave down, and usually somewhere between the first and second fib target, you also have the hourly moving average here is going to find support and reverse. It doesn't, so it was pretty weak at the time. I wouldn't have necessarily bought that pullback, but you can see it was very strong. All the time frames were up. If you wanted to wait for the trends to switch back up and also to go back above the hourly, you can see if you bought this breakout right here, you pretty much broke even. If you bought this one right at 24, you're still in the trade, and it went all the way up to 44. So you had a 20 pip potential on that last trade as well. That's why I primarily use range charts with my own trading. Let's look at what happened later in the day. The euro had some strength. The longer term trends were kind of mixed. You can see it went up with a lot of momentum, had a little bit of weakness, and then the momentum kind of died. You don't necessarily want to look for sells, but when you see extreme weakness come in, followed by less strength, and the daily trend shifts down, at 7:30 right here, you can be looking for sells in the euro. Now, what would you want to sell it against? Well, the yen was the strongest between the dollar and the yen all day. So at 7:30, it makes sense to look for euro-yen sells. Strong yen, weak euro. And if you looked at this chart on here, again, some of the longer-term trend indicators take longer to switch. You know, when this one broke from above to below the hourly, that's the point where you really want to look for sells. You can, all time frames shift trends slower. So in other words, the real-time trends, which you can see in our FX Trend Pro, can shift within one 5-minute bar. The daily trend can take, as you can see today, 7.5 hours to switch from an uptrend to a downtrend. If the previous day was extremely strong, which you can see it was, pretty much straight up, and the day before that straight up, it takes it longer to change to a downtrend. Let's scroll over here and just take a look. Notice it went sideways here on Friday and then exploded up. And on Sunday it was up. And therefore today it took longer for the longer term trends, the daily, weekly, to shift down. But that's why we use the hourly moving average in conjunction with this. If a currency is above the previous day's high right here and fails, can't stay above there, can't stay above the hourly, this is a wonderful place to sell. You made a few pips on that one. When it came back up to the hourly and the previous day's high and wasn't able to get above it, also excellent place to sell. Let's look at the range chart just to show you again why I personally use this. When it breaks underneath the hourly, if you went short and used our trailing stop to get out, you made about 12 or 14 pips there. And even if you use the trailing stop every time for entries, if you shorted here at 32 and got out with a loss, you lost 5 pips plus the spread. You then get back in here at 52, and it kept you in until right here. You made 52 pips there. And then on this one right here, you're short at 97. It got you out right down here at 20. So you made 70-something pips. These two trades right here made 130 pips. So obviously on big trend days like this, you can get back small 6-7 pip losses with just one, or today lucky enough to have 2 huge wins.